It is Fed week. That's right, we're coming into the first FOMC committee meeting of 2023. So as you can see here at federalreserve.org, all right, you can find all the meeting dates. Here we are, January 31st to 1st. And so on the Wednesday, February 1st date at 2:30 p.m. Eastern, we're going to hear if the Fed is sticking with their plan of a smaller, but still rate hike of 25 basis points. And more importantly, what Chair Powell and the statement will say afterwards that might clue us into future policy adjustments and therefore how the market may react. So let's take a look at how things are setting up on the SPY, the S&P 500 SPDR ETF, going into this news date. So if you're new here, I'm Hima Reddy, and I use price, time, and momentum analysis to direct my trading and that of my tribes. And we're going to bring over my TradeStation charts here. So this is the daily chart of the SPY ETF, every candlestick representing 1 day of price action. Now you can see I have some analysis that's on here. I shared this recently with you all and talked about the likelihood of continued upside, and that did unfold. So we went through this 399.07 and we are now hanging out after reaching this 404.78 resistance level, okay? So that's based on my Gann candle nano techniques where I go inside candlesticks to find key support and resistance levels. Now, in a deep dive with some of my members last week, I looked at 3 different forecasts that are sort of triangulating on the SPY, okay? And they're out here. Now, the thing is when you have 3 different forecasts, so markers are price and time, you can triangulate kind of like a cell phone tower and find where the core point is. So I'm going to give you the core point here. So just stay tuned. I'm going to drop that in the chart in a second. Okay, so here it is. This intersection, this purple intersection of price and time is showing February 6th at 416.50. That is my triangulated forecast for the SPY. So again, this is not a forecast all on its own. This is me taking 3 different forecasts and finding the sort of center point of all of them. So this to me is the biggest magnet, likely pulling price right to it. Now this forecast is unlikely to be met just by the market going straight up and to the right. It's probably going to be jagged and have some wiggles along the way. So let's take a look at the support levels that are important coming into this. And I'll do these with you right here on the chart. So you can see I have some prior support levels. Those are from when I first did my deep quarterly outlook on the SPY back in early January. And so I'm going to take these existing lines and move them into place to provide new levels. So 374.77, 383.38, 387.26, 391.08, and one more, 393.56. So notice I was just taking the same group of support lines and moving them up so that I can be more focused on the recent action. Now, I didn't just willy-nilly pick those numbers. I did them fast in front of you. It may have looked that way, but I was making a conscious decision anchoring them to particular price action. Here's what I want to point out. You can see the most recent is 393.56. If into this February 6th date, which again is the triangulation, the center of 3 forecasts, if we do not continue higher and we come back and break below 393.56, then I would watch out for weakness into this zone right here between 387.26 and 383.38. Why? Well, there's, again, the specific support and resistance that I pulled, but I also want you to see how this is in line with the old tops here from this past consolidation that ate up all of that trading time over the holidays. Okay? So this is an important zone of support if we push below this low from January 25th. So there you have it, a game plan for how to navigate the SPY, not only heading into the Fed meeting, but also the Friday jobs data and more. There's Apple earnings coming this week as well, and Apple is the biggest component of the S&P, so it's likely to fuel the direction of the SPY. The thing is, guys, no matter what news is out there, whether it's expected or comes as a surprise, if you do your analysis, applying your technical analysis and studying price, time, and momentum like I do, you can be ready for those opportunities no matter how the world is unfolding. So there we have it, the triangulated forecast and some key levels along the way. I'll catch you on the inside.